Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, including the benchmark index moves, the sectoral action, as well as all the stocks that are buzzing in trade today. We'll also get you expert views as to how should you be really approaching the markets as of now, and also whether in FY24 you will have enough opportunities to tap into the new primary market space as well, the new IPOs that come up as well. Looking at the kind of volatile scenario that is that going to be a dried up spell in that space as well? That's going to be a focus of the discussion today as well. But first up, a quick check on how the markets are doing at this point in time. Well, definitely remember that it is a truncated week and therefore we are seeing heightened volatility right from yesterday, and tomorrow the expiry, the weekly expiry has been preponed to tomorrow now on Wednesday, and therefore we can still see some signs of volatile moves really emerging right from the word go today. Even right now, if you see, the Nifty and the Sensex are actually trading quite mixed, with 16,972 currently for the Nifty 50, down about 14 odd points. On the other hand, the Sensex is up by 17 points, 57,675. That's the level at which the Sensex is moving at, absolutely flat with a positive bias right there. When we also look at the other segments of the markets, including the broader markets, the mid and the small caps, they are in fact lower in trade. Second day in a row, they have been underperforming. The small caps especially down by 1 odd percent at near the lowest point of the day. In fact, when you talk about the mid-cap 100 index, that's down by half odd percent. Also, when you talk about the sectors, most of the sectors are down in the red, barring slight gains that you are able to see on the Nifty Bank and its constituents like financial services and private banks. The PSU banks are really down in trade today. 1% of a cut is being seen for that one. Media stocks down in trade, half odd percent cut for the realty space as well. Apart from this, autos are dragging in the slower rain as well in today's trading action. The metals are looking like off their sheen, about half odd percent of a decline for that one. IT, FMCG, even pharma, that was looking higher yesterday, is seeing some profits being taken off the table. The market breadth as a whole is also favoring the declines, with 32 stocks deep in the red, with 18 stocks up in the green as far as the Nifty 50 stocks are concerned. The big laggards include the Adani group of stocks. Remember, after a month's time, we did see all the Adani group stocks slipping in yesterday's trading action, and today there are being seen some more cuts on these stocks. Adani Enterprises, for example, down by over 6 odd percent. Adani Ports 5 odd percent down. Tech Mahindra, Hero MotoCorp, BPCL, these are the other major laggards as far as the Nifty is concerned. On the upside, however, you do have mixed reaction. UPL, for example, is up in trade 2% odd. IndusInd Bank from the banking majors 1.5% up in trade. Coal India, Dr. Reddy's and Hindalco, the other major movers at this point in time. Time now to welcome our guest on the show. Mr. Abhishek Basumallick joins in. He's a founder at Intelsense Capital. Welcome, Mr. Basumallick, and thank you so much for taking the time out. Well, we've been seeing heightened volatility, right, because this is the last trading week of FY23 and a truncated one at that. We are seeing some positions being rolled back right here. Your thoughts on how should the market investors really view this kind of volatile move as we end the year?
First of all, thanks for having me on your show. And I think, this has been going on practically for the last 1.5 years, right? I mean, I was just checking the last time market was at a sort of new high was in October 21. So exactly 1.5 years where the market has gone sideways and slowly down. So this kind of volatility is what I think people have come to expect and come to sort of get used to. Every few days we see a slight up move, then we see a few more days of correction. So nothing, different as such. All the indices, if you look over the last 1.5 years, are more or less flat. I mean, maybe the small cap index has lost a bit, but Nifty as well as the mid cap index are pretty much flat for over the last 1.5 years. At the end of the financial year, I think there is always this tendency for booking losses for tax purposes, and that is something that is happening this year as well. And again, nothing much to sort of read into it.
Okay, understood that. We're also seeing that not just the main markets which have been sideways, even the primary markets have been quite lackluster. I mean, when we look at the kind of data that there is, in fact, the primary market space seems to have dried up, and we've many names in the fray which have actually deferred their IPO plans, looking at the current volatility and the uncertain conditions that the markets are faced with. After Fab India, names like Joy Lucas, they shelved their IPO plans recently due to the unfavorable market conditions. Also, reports suggested how hospitality major Oyo is now slashing the IPO size by two-thirds amid the market volatility. Earlier, we also heard that cab aggregator Ola had deferred the plans to launch the IPO as well. There were news reports suggesting Mamaearth withdrawing IPO plans, although the company has now come out and said that they are still working with the regulators and the IPO plans are very much in play. But we do see, these kind of negative reports coming about. I wanted to take your sense as well. In the last 2 years, 2021, 2022 also to a large extent, we did see most of the, and 2020 of course as well, when we did see in the last half when a lot of IPOs had hit the street. Last 2.5 years had been pretty decent for the IPO space, and 1 lakh crore rupees and over that kind of sum was also raised. So huge IPO funds were raised from that market as well. What's the sense that you're getting? Is that space going to be lackluster as we move forward into FY24 as well?
See, two things we need to understand about IPOs. An IPO is where a promoter is coming and selling his a promoter or a private equity, as the case may be. They are coming and selling their shares to the public. Now, what happens is most of the time, a person who wants to sell would want to sell when the circumstances are right, when he can get good value for the money that he thinks he's putting on the table. So you will always find that IPOs start and IPOs flourish only when the secondary market is in a bull phase. Now, when secondary market is very lackluster, like it has been over the last 1.5 years, or when uh, uh, the secondary market is in a bear market, you will practically see no IPOs coming. And
Okay.
if number of IPOs is actually a trailing indicator of whether you are in a bull market or a bear market or a sideways market, right? So right now we are in a sideways bearish kind of market, and that is why you're seeing that all these IPOs have dried up. The moment the market starts going up, you will find all of these people back in the fray, and then in a very short compressed period of time you will find that a lot of IPOs happening.
Okay. And what do you anticipate about the kind of reduction in the size? I mean, are these IPOs, especially the startup IPOs I'm talking about, most of these IPOs which had listed with a lot of fanfare in say 2021, after a year or so, they've actually seen a lot of their valuations being taken off in the kind of reduction in the kind of levels that we've seen in the prices also. The stocks have actually been hammered quite a lot. Looking at the kind of scenario, do you see further the new startup IPOs that will be listing will a lot more be cautious about the kind of valuations they will come out with? And do you see more reasonable valuations now coming in?
See, definitely there will be a tempering of valuation, because no one wants to get into that situation, where they come up with IPO at 100 rupees and within 1 year they find that the price is at 40, 50, right? No promoter wants to get into that situation. So there will be some kind of a trade-off. If they wanted 100 before, and maybe the fair value at some, by rational expectations is say 50, maybe they will try to price it closer to that 50, maybe 60, 65, whatever, so that it will probably still be a little bit overpriced, but not as overpriced as the last IPOs that we saw in the previous years.
Okay. Most of the investors, especially retail investors, they view new IPOs as an opportunity to get into a stock at an early stage with a hope that in the long run, the IPOs can actually create a lot of wealth. In your experience, over the last 10 years, 20 years, have you really seen that investors have made a lot of money by putting money in such IPOs or companies like that which come up with their IPOs? Or do you think the listed space, the secondary market, is a much better space to look at for opportunities?
That's a very interesting question. I actually had done a study some time back, maybe a couple of years back. I don't exactly remember when, but the result was that if you diligently buy every IPO and hold it for a year, you more or less come out even. Now, the problem with that is, the results tend to be much better if you buy uh, 6 months to 1 year after the IPO. So, my sense has always been that it is better to wait for a year, at least 2-3 quarters, to see how a post IPO, how the company's results are. And then if you think that a company, you want to buy into a company for the next, say, 10 years, for example, with a long term horizon in mind, then 1 or 2 quarters here or there is not going to make or break your investment thesis. The advantage is, before the IPO, what happens is there's a lot of cleaning of books, there's a lot of window dressing, if I may put it that way,
Hmm.
so that the numbers look nice. So after the IPOs, a lot of times you will find that numbers sharply deteriorate for 1 or 2 quarters, right? So if you wait for that time, you get a sense that, okay, what are the real numbers? And then if the prospects look really good, if the business is really, in a sweet spot, then you can always go and buy it after 6 months.
Okay. From the recently listed stocks, also I wanted to take your view. Stocks like Zomato, PB Fintech, Nykaa. Nykaa has been in news again because of the top level exits right there. Although Zomato has been seeing some news flows with regards to tie-ups for expanding its fleet going forward from here. But and recently we did see in Q3 especially, most of the companies really looking forward to now getting cash positive, now looking at approaching profitability. Some of them also reported EBITDA positive, before, like a Paytm, much ahead of its own expectations as well. Do you really see any of these companies looking promising at the kind of valuations they are trading at right now, and with the kind of fundamentals they are working with the kind of earnings that they are posting now?
Yeah, I mean, of the four stocks that you named, I think I personally like Zomato and PB Fintech as businesses. I'm not very sure of Nykaa, because I think the competitive space is extremely competitive, and I do not like Paytm. I think they are again very in a very competitive situation, and they are like number three or below in each of the segments that they operate in. I mean, they are not able to get into the, at least in the top three market leadership positions in any of the segments that they operate in. So I personally feel that they're going to struggle no matter what they do, unless they can find something where they can really shine. But coming back to Zomato and PB Fintech, if you look at their businesses, you will see that they have, at least they have done something where competition is not that big. They are able to reach out to their client base. The only question is valuations, right, at which you want to buy in. Uh, for both Zomato and PB Fintech, I think they are at positions where investors with long time horizons can take a look and take a judgment call.
Okay, that's about the IPOs that we've already discussed. And of course, we will keep an eye out on the upcoming IPOs and we will chart that trajectory. But for now, it looks like the space is going to be lackluster for some more time, till the time we do see the markets really taking one side direction and more stable kind of moves in the markets as well. Let's now move on to understanding more about the secondary market space as well. But the point that you also made, that in the last 1.5 years, in fact 18 months or so, when the markets have really been in a sideways kind of a market, when was the last time you saw the markets really consolidating in this kind of a narrow range and for such a long time, 18 months?
See, I mean, I think 18 months, we'll have to check back, but I don't think that we've had extended period of consolidation pretty much in a long time. I think
Hmm.
2015 to 16, there was a fair bit of consolidation which happened. And before that, I think, if I remember correctly, somewhere around end of 2010 to about 2013, 2013, middle. So that was again another phase of about 2 years where the market was actually very flat and in a zone that it was traveling. And it's actually good in a sense that once these consolidation happens. So for example, if I remember correctly, after 2013, right, the markets actually moved from that 6,000 odd nifty levels to 9,000, and that was a very sharp up move in a 1 year, 1.5 year time frame. Then again it consolidated for
Hmm.
over a year, up till I think 2016, 17, and then again it sort of kept moving up till pre-COVID, and then we had the COVID fall, sharp up move, and now we're sort of in a phase where we are digesting the up move
Sure.
that happened due to COVID.
Okay, just one last question to you, Mr. Basumallick, and we're running out of time, so we'll just quickly wrap it up at that. For investors who are looking for opportunities in this kind of a volatile scenario as well, should one really stick with names like a Reliance Industries, some of those traditional names that have been in long-term portfolios for investors for a long time, 10, 15 years, have been like stable names and provided some support to the markets? Is this that kind of a market where you just hold on to those long-term winners and not go in for some of the experimentation?
You're right. I mean, now is the time actually to have consolidate your portfolio, look for stocks which are stable, where downsides are limited, with also one eye on the next 2 to 3 years. Because like I just said, right, I mean, once this consolidation is over, uh, history tells us that we get into a sharp up move. Now you
Hmm.
need to position your portfolio to benefit from that sharp up move, right? So if you're only in defensives, then you will also not be, I mean, your portfolio may fare well now, but when the up move comes, you will also not perform or participate in that up move to the extent that you would probably have if you have a more diversified approach.
Okay, well, thank you so much, Mr. Basumallick, for being with us on the show and discussing with us so many insights about the markets going forward and the strategy that investors must adopt in this kind of a volatile scenario. The markets are now deep in, now, marginally in the red, if I may say so. 16,961 currently for the Nifty, 25 points down. The Sensex also in the red, flat with a negative bias at 57,640 currently. We'll have to keep an eye out on to find out whether the second half, especially the last 2.5 hours, really show any kind of a bounce back from this kind of a dip that we are seeing in the markets. But overall, as our experts mostly want, suggesting to us that ahead of the expiry there could be some more heightened volatility, so investors need to brace up for that. We'll continue to give you all the updates about the markets, and for that you should stick with us on Business Today TV. Don't forget to subscribe to this channel and also continue to stay with us on our other social media platforms, that's Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in.